Excellence is continuous. It can be complex or simple. Each day is an open challenge to achieve success and turn adversity into opportunity. At RGF Executive Search Japan, we make winning a daily objective by aligning unique bilingual talents who invigorate organizations and drive sustainable growth. Excellence begins and ends with people. To execute your Japan recruitment relationship, contact us and let's begin.
Good evening, and welcome to the webinar with Patrick Branch, Critical Trends Shaping the Healthcare Market Landscape in Japan. My name is Ryan Shepard, Associate Director of Healthcare and Life Sciences at RGF Executive Search Japan at Recruit. 5 years today, we were all coming back from Christmas vacation, and COVID was right around the corner. Little did we know on January 9th, 2020, that 3 months later, 62% of the world's planes would be grounded. So we've all learned how to tell fact from fiction since then. And while Black Swan events are out of our control, we've all also learned as global leaders to be better leaders under volatility, uncertainty, and ambiguity and uncertainty. So today I'm very happy to present Patrick Branch, who is a highly respected industry veteran in Japan in healthcare, not just in pharmaceuticals, but in medical devices as well. Patrick brings a wealth of experience from strategic consulting, but is currently with Nxera Pharma, which is rapidly growing its presence in Japan. And Patrick, thank you so much for being here today.
Thank you, Ryan.
To be able to spend some time with Patrick, who many CEOs pay big money for, is a privilege. So thank you very much for taking your valuable time for the community today. And about 20 minutes into the talk, we'll open Q&A, which is text only, and it's anonymous by default. So if you wish, you can enter your name into the text field there to have your name shown. That's totally up to you. So without further ado, Patrick, I'm going to give the floor to you to walk us through some of these critical insights and macro to micro trends that we're all looking forward to see, and then we'll open it up to some Q&A. So Patrick, over to you.
Yeah, thanks, Ryan, and good afternoon to everyone. Maybe just to begin with a couple of things that I'll go through before I open the slides. First of all, I guess the thinking behind the topic for today, which is from macro to micro, key trends shaping Japan's healthcare market. The idea here was not necessarily to basically play back all of the stuff that is easy to read in the newspaper and see on the internet about pricing pressure in Japan and policy challenges and omni-channel and all of these things that we've already all heard about from many sources, and I didn't think I can add much value by repeating what's already been said. The genesis of this discussion was more a reflection on some of the things that happen, which are big, which are surprising. For example, waking up one Monday morning and finding out there's been a military coup overnight in Seoul. And also the lack of attention and thinking that many of us, myself included, give to the possibility of such events. Even if we can't imagine specific events, we don't posture to be ready to react, to be defensive, to take advantage when disruption happens. And as Ryan said, just 5 years ago right now, the ship was hitting the epidemiological fan somewhat, and our lives were all about to change. And some of us kind of reacted differently than others, and some prospered and some suffered, and so on. So I want to kind of step back and think a bit about macro factors today and the implications of those macro factors in general for commerce and business in Japan, and also how they might shape the healthcare landscape for people doing business in Japan in healthcare, as well as healthcare companies headquartered here in Japan. and kind of think through a bit about how, think this kind of thought exercise can help us shape our destinies rather than be shaped by events happening around us. And also I thought, maybe it's a bit more fun than to talk about pharma pricing and policy challenges to talk about some bigger things and to have some contrary perspective shared and such. So that's the idea here, and I hope it's an enjoyable session. I'll just give you a little bit of background about myself. So I'm from the UK originally. I left the UK originally back in 2002, actually.
Just a heads up,
Born-
Patrick, if you are
Yep.
sharing your screen right now, we can't see the slides.
I'm pre-sharing, so I'm still giving you the raw Patrick right now.
Okay, no worries.
So I've been out of the UK for a long time. I live here in Japan. I've lived here a total of 14 years on a few different occasions. Married, 2 children, 2 dogs. So quite well established personally here. Educational background, kind of a weird mix of history, business, and public health. Been to college in a few different countries around the world. From a professional perspective, I'm currently heading Japan Asia Pacific business development at Nxera Pharma, which is a Japan headquartered but essentially international pharma company with a big UK presence as well as a big Japan, Korean presence. And I am basically trying to in-license and acquire drugs to sell in the region. But before that, I was in a consultancy firm called LEK Consulting for nearly 17 years. And towards the end of that time, leading or co-leading the office here in Japan. And over my career, I pretty much exclusively focused on healthcare. A lot of that in pharma, but also, as Ryan mentioned, medical devices, some healthcare services as well. And in terms of my things I like to do when I'm not thinking about exciting things like macro trends and PowerPoint slides, obviously spending time with family. I like reading, especially interested in history and current affairs. I like running to the point of an unhealthy compulsion. So that's just a bit about me. So I'll go to slides now. Let's see how this is going to work. Can you see this, Ryan?
Yep, perfect.
So macro factors. What do I mean by macro factors? So there's a bit of a framework that I use to somewhat break apart the big world of what goes on beyond the immediacy of commerce. So you can see on the left-hand side, we've got this PEEST frameworks of political, economic, environmental, society, and technology. And this, in my mind, encompasses many, if not all, issues that shape kind of the bigger picture of current affairs and even the flow of history that kind of happens around us and really can shape our lives in quite dramatic ways, but in many ways is also beyond our direct control, at least for most of us, but we can try to understand these factors. And in practice, many of the factors that would fall under this framework aren't necessarily discrete, but it helps just to kind of break it up a bit so that we can talk and think about it in a somewhat smart and neat way and be comprehensive at the same time. So that's kind of how I think about this. And let's see if I can change the slide. So I used AI to make this slide. I haven't made many slides in the past with AI, but this is one of the first ones. This is a word cloud made by ChatGPT of a whole bunch of different things, which are macro issues, which are shaping our world. And I mean, obviously AI is one of them from a technological perspective, but the world of macro factors and issues stretches from geopolitical conflict to water shortage to I don't know, aging populations to economic disruption and frothy equity markets and so on and so forth. So there is a lot going on in the world of macro factors, which I'll try to unpack a little bit further. How do these macro factors matter to healthcare? So you may think to yourself, what the hell does this have to do with me and my role in healthcare in Japan? Well, I've laid out here some the demand side issues as well as some supply side considerations as well. And it doesn't take too much effort to see how these are shaped somewhat by the things on the left. So if I just look at a few of the demand side things here, it's a lot underlying age and health of patients in the market we serve. Obviously, you know, things like policy around healthcare access and the design of even preventative care is going to shape, how healthy a population is, how old they live to. That's shaped in turn, the type of healthcare that can be provided by taxation policy, the wealth of a country, which is also shaped by, very big things like access to resources and human capital and even geopolitical conflict. So there is a direct, well, not, it's a little bit, there's a few steps that have to happen, but a somewhat direct connection to the things on the left here to the demand side issues. Similarly, things like investment in healthcare infrastructure, investment in human resources that's shaped by available resources, conflicting priorities or challenge, competitive priorities in terms of where a country's resources can go. If you think about Japan, what's competing with healthcare for resources today, it's things like the defense budget, doubling the defense budget because of the geopolitical challenges in the region, and also the nature of the dynamic with America and the alliance there, and how much Japan can rely on America to protect it. That connects to how much funding is available to spend on healthcare. So things like building hospitals and purchasing vaccines and paying for drugs and so on. But also, things like attitudes towards healthcare. For example, attitudes towards vaccines and attitudes towards preventative care or sexual health and so on. These are shaped by broader currents in society and values and discussions and discourse in culture and such. So you can see on the demand side, there's obviously a connection. And then similarly on the supply side, for example, innovation has to be funded. Again, that connects back to resources available to fund risk appetite and so on, availability and cost of capital, which would fund innovation, but also fund all of the other stuff that fuels business, that connects obviously to macroeconomic policy, and so on. Competitiveness of our markets, who can enter, who cannot enter, barriers to entry and so on. That can easily be shaped by political issues and preferences and economic nationalism and such. So really the market in which we participate, it does not exist separate from macro factors. It's very much a product of macro factors, and a big kind of juncture or change in one of these factors can have big implications both on the demand side and supply side for healthcare in Japan. So I'm going to get a little bit more specific now, and I'm going to have maybe a bit of fun as well. It could be a very dry discussion where we go into things like Bank of Japan policy and what that means for risk funding in Japan, but I'm not going to do that. I've got a few trends that I want to click on, which I think are ostensibly big, but they can and do connect into the healthcare marketplace and our kind of immediate, world of commerce. So one is Trump, and what does that mean for Japan, and what does it mean for Japanese healthcare? The second one is about private equity and how that is shaping our marketplace in Japan. The third is innovation, and that encompasses innovation coming in from outside of Japan, but also innovation bubbling up from the biotech ecosystem here. Number four is a bit about AI from the technological perspective and how that is shaping our landscape and how well we're all doing keeping up with the potential of technology. And then the fifth one here is, it's almost that the trend is uncertainty itself. It seems that we live in increasingly uncertain times, and in some ways we should expect the unexpected, so to speak. And I'll talk a bit about that in a second, and how we can posture accordingly. But first of all, everyone's favorite topic, let's talk about Donald Trump and what that could mean. So I've decided to take a bit of a contrary point of view here. It's very easy to say, wow, Donald Trump's coming, the world is going to end, it's going to be dreadful, there'll be world war, there'll be suffering, there'll be economic warfare, we'll all be poor, everything will go badly. We all know those arguments and those points of view, but what could go right? And I've kind of described this as the Trump equilibrium, which is, it kind of assumes that Trump is a bit of a counterweight to some of the other disruptive forces in the world. And with, disruptor in chief Donald Trump there, is there a case to be made that the world will actually get a little bit more stable and Japan could be on the right side of that equation? So what could go right? So number one here is we could see US growth continue. It's already, been on a bit of a run for the last 7-8 years. Could Trump sustain that trajectory, and what would that mean? A weaker dollar, what might that mean? That could be helpful for Japan, as I'll explain. Could we see a more stable world geopolitically, as countries or basically geographies such as China and Russia find themselves facing a bit of a counterweight in the unpredictable Donald Trump? Could we see revitalized allies of the United States, kind of shocked into beginning to invest a bit more in their defense capabilities, in their own economic capabilities and such? Could we see improved economic ties with some allies, streamlined bureaucracy maybe in the US, perhaps a more pro-business attitude also in the US that might have implications for us in Japan? So what was it like last time with Donald Trump? I was reflecting on this. There were some shocking times. There was a period where it looked like Japan might be attacked by North Korea with nuclear missiles, but there were also some things that were kind of interesting. So there was the bromance between the late Shinzo Abe and Donald Trump, and there's a nice picture there on the left. So there was a good relationship between the two countries led by Abe-san. There was also a lot of noise about Trump telling Japan to arm itself, Trump kind of scaring the Japanese vehicle industry, but then also, maybe a strengthening of the alliance as well. And just looking at economic considerations over the Trump presidency, last time, it wasn't that bad for Japan. So the Nikkei index grew quite substantially to pretty much get back to just after the bubble burst, actually. So it's 1990 levels. And then the yen actually strengthened over that time as well. So Japan didn't do so badly economically. So what could this mean to the positive for healthcare companies in Japan? And that would include companies operating in Japan, but also those that, are headquartered here and market their products in the United States. So continued American growth, that could lead to increased demand for healthcare products from Japan. So that's quite a simple one. There's also the potential for a Trump administration maybe to remove and roll back some of the more controversial aspects of the Inflation Reduction Act, which you may recall was not very favorable to small molecules, well, biologics as well, but also particularly small molecules in terms of the timeline for when they would be subject to Medicare negotiations. Is there a chance that could change? Could the FDA be streamlined and made more efficient? And would that end up making the US even more attractive to Japanese headquartered healthcare companies? So that's something that we could plausibly imagine happening. We could see a stronger yen, which would actually be quite beneficial, well, I guess to a point maybe for Japan's domestic economy. Could take the heat out of the inflation that has been, it's not been as severe as many other geographies in the world, but, has been a bit of a pressing issue in Japan for the last couple of years. That would also lessen the Bank of Japan's impulse to raise interest rates, which go, they're obviously in line with where inflation seems to be headed, but counter to the actual economic growth profile of the country, where there should be more stimulus, to be honest. Would it create, less pressure on input and capital costs for manufacturers as well? So that would take some of the pressure off P&Ls for companies doing business here, who've suffered from a weak yen and having to pay a lot more for things imported from outside of Japan. Regional and global stability, that could also result not in reduced disruption to supply chains. So we could see that would also have a benefit to the cost of what's supplied by those supply chains. Another point here might also be that, well, I think it's going to continue down a similar trend to the way it's been going, but Japan continuing to be a key counterweight to China economically and potentially geopolitically as well, that could support more investment into Japan, including into healthcare, both innovative and mature, which would also be favorable. And in terms of the threat of tariffs, to be honest, Trump's attention seems to be pointing somewhere else right now. He seems to be particularly concerned with Canada and Mexico. So, as long as you're not completely misaligned with Donald Trump and there's other good things going for you, there may be the chance that you can escape some of his attention. And even if he does get worried about Japan a bit, as he tends to do, there are some pretty sticky agreements in place that would take some time to unwind. So I guess in sum, we could imagine some things going quite rightly for Japan as a result of the Trump administration. So I will move on. I've got a few things to get through here. So next is private equity. So this is one trend I've been watching quite closely. I've been in the world of business proper business since about the beginning of 2007. And private equity was always a trend or an issue or sector that I kind of watched in Japan, and it never really took off until about 3 years ago, when all of a sudden a lot of deals started happening, and a lot of interest started being indicated by investors and firms that operate in the space. So I've got here a chart of deal value over the last 23-4 years, and I guess you can see that it's going up. I think the 2024 data for deal value and volume, I think it would be value, shows a further 25% increase on the 2023 number here. And it seems, based upon a lot of the news flow just at the beginning of the year, that we can expect that to continue to grow. And you can see there's a whole bunch of news about interest in Japan. The foreign private equity firms are coming. They're coming with lots of capital. They're very excited, want to shake things up. Lots to be excited about. Japan is standing out in the world for being one of the most attractive markets for private equity right now. And that's a big change from what it was like, 7 years ago, 10 years ago, 15 years ago. Why is this happening? There's a bunch of things that are kind of the confluence of a bunch of factors that are making this happen. Some of them are fairly obvious, intuitive. The yen is weak, so Japan is almost on discount, and you can see that with also the number of tourists walking around the streets of Tokyo, marveling at the low cost of sushi. Japan is cheap. Japan is, as I mentioned, there's some geopolitical factors that are making Japan look relatively favorable to the past favorite, China. So flows of capital are moving away from China to Japan. Locally, there's growing tolerance of private equity. There's many high quality companies here with, good products, high quality products, lots of customers, loyal customers. At the same time, there's opportunities to manage companies in Japan. I don't want to be rude, but maybe in a bit more professional or world-class fashion, so that on the one hand, you don't need to lose the quality of the customers, but you can serve those customers more efficiently and perhaps find new customers. And private equity sees that opportunity. There's also things like the capital gains taxation rate, which isn't actually that bad compared to some other markets in the world. So basically, taxes on capital gains are about 20%. So if you are a lucky enough person to be enjoying the gains from private equity deals and subsequent exits, your flow of income is taxed in a very favorable way. I mean, going back to kind of the corporate side of things, on the one hand, companies could be better managed, but on the other hand, there is an improvement in corporate governance more generally in Japan, a little bit of an outcome of the efforts of Abenomics, and companies essentially looking at their groups and portfolios of companies and thinking about, where should we actually be playing, and which of our group companies doesn't really belong here anymore and would be better served under different ownership, and that's leading to opportunities for divestments and such. Just a few more points here. So clear exit paths. So there are various ways that you can exit from a private equity deal. And of course, if you don't exit, you don't get your return. So pretty important that you sell what you've acquired at some point. You can sell to strategics, you can sell to other PE firms, IPOs, and so on. There are a few other things, low borrowing rates, of course, and then also succession issues at some or many Japanese firms where there is no generation of future leaders. So lots coming together from a PE perspective. What could it mean for healthcare? A few things. So we have a graphic on the left here, which just visualizes operating margins for pharma companies in Japan, return on invested capital for pharma companies in Japan, and valuation multiples as well. So in short, margin for many companies, pharma companies in Japan and in general healthcare is poor by international standards. Return on capital is poor by international standards. But valuations based off of these kind of points are kind of internationally comparable, which suggests, if you can get margin up, if you can improve the efficiency of how you use capital, you're going to get a nice return, assuming that multiples stay the same. And ideally, you get a better multiple as well. But there's big opportunities to create value in Japanese healthcare by getting stuff up to international standard. So where might we see private equity playing? What could it do? I mean, there are a number of struggling pharma companies out there. We've read in the news of a few companies that are up for sale and being considered by private equity, and also from the medical device side of things. I've kind of alluded to these on the bottom left. So, we could see private equity ownership at some of these companies in the near future. In companies that aren't being targeted by private equity right yet, just the presence of private equity in the marketplace can be a disciplining stick, so to speak. So the threat of private equity interest in itself can get management to think a little bit differently about how they manage their companies. We could see, and we are seeing actually in the world of generics, private equity beginning to act as an aggregator of kind of a fragmented sector that could be a lot more efficient if there was more scale. So the JWP, J-Wheel Partners, in combination with MediPal, the pharma distributor, are currently taking positions in a number of different and large generics companies. And there's the potential there for a roll-up to happen that could create a much larger and scaled player in the generics landscape, which probably would be better equipped to navigate the challenging marketplace here. Private equity could also be, and venture capital as well, a catalyst for the innovation ecosystem. So, innovation here, and we'll talk a bit about this in a second. There aren't perfect capital solutions along that kind of life cycle from very early stage kind of venture companies all the way through to public kind of biopharmas. Having more providers of specialty capital for different stages from Series A to IPO and onwards would help enable the ecosystem. And then also having private equity in the mix in the country creates metabolism. Some of it's not pretty. People get hired, people get fired. There's divestments, there's acquisitions. Private equity gets a bad name for some things. At the same time, if you think about Japan, its demographic situation, its shrinking workforce, metabolism, while in itself can be a bit shocking, isn't necessarily a bad thing if people's skills could be better deployed for more efficient things elsewhere. And that's likely the case for Japan, although it's not pretty when it happens. So there is the potential for private equity to add to the dynamism of the country. Moving on to innovation. I've got a few points here. First of all, so this is very much from the pharma perspective, and this is innovation coming to Japan. And then in a second, I'll talk about innovation bubbling up from within Japan. So this is basically the case for in-licensing, the case for bringing new drugs from outside of Japan to Japan, and what's going on there from a demand side and a supply side. It seems that there is a strong case and that would support, expectation that we should see a lot of innovation coming to these shores. If you think from the demand side, Japanese pharma companies, their businesses here in Japan have weak pipelines. Some of the companies are giving up a bit on their international ambitions and beginning to retrench to Japan, even though the marketplace has some challenges. But they need pipeline, they need portfolio, they need assets. This is actually to a certain extent true for multinationals operating here, particularly those facing LOEs in the nearish term and revenue gaps towards the end of the decade. They need drugs to fill those gaps and would like to do Japan deals. We've all read about the drug loss, the drug lag from a kind of a public health perspective as well. The government would very much like to have drugs which aren't available in Japan but are available elsewhere to be here and bring those drugs to patients. The marketplace is also, pricing, in my opinion, is generally pretty good. Development barriers are not too insurmountable, and basic access is generally widespread. So there's a good marketplace here when things arrive. And there are also increasing numbers of companies who are looking to do licensing deals. They're not all your typical Japanese pharma company that's been around for 300 years, or a Switzerland headquartered multinational big pharma. There are companies like Nxera, for example, that offer a differentiated partnering model, and having choices for companies looking at Japan should help enable more stuff coming here. On the supply side, from the ex-Japan biotech side, there's a number of push factors that mean they should be looking to do Japan deals and to bring their innovation to Japan. There's been a whole load of innovation happening outside of Japan over the last, you call it 5-10 years, with COVID era kind of fundraising and company creation being a real catalyst to a boom in Boston and San Diego and so on. And there's lots of exciting things which for diseases that before hadn't really got good solutions and treatments that are coming to the fore. We've seen this in obesity, but psychiatry is another area, immunology as well. So there is this golden age of innovation happening outside of Japan. At the same time, many of the biotechs who have discovered new exciting therapies, they either have financial challenges right now, so they need to look for capital, maybe from doing licensing deals in Japan, or they shouldn't get distracted by trying to do Japan by themselves. Many of them would like to do the US and basically bring their products to market themselves in the US, maybe Europe. Japan might be a step too far, and hence there is a bit of a push there for them to look to license. And then also, if I think specifically about Chinese sourced innovation, so this is the bottom right point, there's a whole, I was at a conference in October in Shanghai, and it's just amazing to see. And this was a biotech conference talking about innovation, talking about partnering, talking about international expansion. It's amazing to see how much innovation is happening there, and the transformation over recent years. And it's also interesting to see how companies based in China are thinking about the geopolitical challenges that they're seeing, particularly in the US. And are increasingly, there's the new co-model. They're looking at very innovative ways of still trying to get their innovation to overseas markets, but at the same time trying to avoid geopolitical challenges. And Japan and Japanese pharma companies might, in my opinion, be a useful stepping stone or a partner to help bring Chinese innovation, not only to Japan, but also perhaps to the world. So the ingredients seem to be here to bring a lot of innovation to Japan. But in practice, it's not really happening, which kind of leaves me scratching my head a bit. I'll explain a little bit about the data on this slide and then my expectations going forward. So top left, this really gives you a count of biotech companies based upon the number of years of cash they have, I think, on their balance sheets to basically sustain their operations. So while the situation seems to be getting better, so companies are getting better funded, there's still a large number of companies that have less than 1 year of cash to use on their balance sheet. And hence there is still that need for financing for many biotech companies out, in the US and more generally. So there is still that need there from a financial perspective. Just on the bottom right here, this is a bit of data showing deal counts for in-licensing deals in Japan over the last 3-4 years. And you can see the orange line is the number of in-licensing deals. So, for example, in Q4 2021, there were 7 in-licensing deals. In Q2 2023, 5 in-licensing deals. And you can see in 2024, the number of in-licensing deals went down quite considerably. Why is this happening, given all the things I just said? It's a little bit confusing. It's my personal take. There's a bolus of innovation that is about to come. Just in my role, I see a lot of companies looking for partners, and hopefully we can see. I mean, there's sometimes some differences around financial terms and so on, and control expectations and so on. But I really feel like going forward, it's just a matter of time before we see a lot more innovation coming back into Japan. So I view this temporary slowdown as being just that, temporary in terms of in-licensing. Shifting attention more to homegrown biotech, I think the story here is a little bit different. We read or we hear a lot about efforts to foster the local biotech scene, and we hope for what I've called a Cambrian explosion in terms of ecosystem, suddenly taking off, and us seeing lots of new companies being founded and so on. And the case for that's laid out on the left-hand side. The science is there. It seems the capital is there. VC funds are popping up. It seems there are ways for companies to, or basically, it's a good career path for both the young and the not so young at pharma companies in a way to do other things in the ecosystem. And the local market is somewhat supportive of kind of innovative pharma. So there seem to be some of the nice pieces required there to support the biotech ecosystem in Japan. However, there are things missing here. So there haven't been that many success stories. Obviously Nxera is an example of a biotech company or a biopharma company that's done pretty well. There's PeptiDream and a handful of others, but we're not seeing these stories even on an annual basis, let alone a month-by-month basis. So it would be great to see more success, and success begets more success as people see, wow, that's working, and that's great, and I want a piece of that. I guess another thing that seems to be missing is strategic exits, and even the intent to exit to a strategic buyer. From my experience talking to biotechs here, there's a lot of emphasis on IPO as the exit, and IPOs in the Japanese market usually don't, Japanese equity markets don't typically go so well. I think companies should look to strategics as the way to a potential exit and position accordingly. One of the other factors I think is going on here is, if I look at the Chinese biotech ecosystem and the profiles of founders over there, almost exclusively they've studied and worked in the United States and learned from a scientific and also from a financial perspective what is required to establish and position and run and basically guide a successful biotech, and they deploy that learning in China, and that's happened again and again and again. When I look at the typical profile of a founder of a Japanese biotech, they just founders just don't have that experience, and that lack of, it can't be helped, but that may be a big gap which is holding back the ecosystem, just that lack of learning from what it takes and what good looks like. I guess another couple of things I've been seeing that may be holding the ecosystem back. Founders typically are more seasoned in years, which is fine. But there are very, very few young founders. And with youth comes dynamism, comes hunger, comes an international outlook. And, there aren't many people that have that here. So that is something that's missing. I guess a couple of other things. We're not seeing so much in terms of bold vision, big bets. We don't have a Masayoshi Son running a biotech company here. Maybe Masayoshi Son should become the Minister of Innovation, kind of an Elon Musk kind of counterpart of sorts. And to be honest, there's not much greed here. Japanese people are frugal, they're modest. With some exceptions, they don't aspire to vast wealth and living differently than their neighbors and friends. They're quite happy with the way things are. And the motivations of biotech founders in other countries, I don't think are solely about greed, but there is, at the end of the day, expectation of big risk, big reward, which is a powerful motivation for taking the leap into founding a company and doing strange, unusual, and potentially value creative things. So those are some of the things I see missing. And then maybe just a bit of data here on the ecosystem. This is basically venture financing by quarter, Japan versus the United States. Japan is the top row, the US is the second one. The third is the US as a multiple of Japan. And you can see that there's a world of difference between venture financings in Japan's biotech ecosystem and that in the US. So a long way to go, but at the same time, we're hoping for catalysts and takeoffs and things to change quickly. Just a few more points and then we can open up to questions. I won't linger too long on AI. I quite like this little meme that's going around about AI and the potential of AI and all of the bold visions that we have for how it can be used and what it will do to our lives and how it will change things for the better or the worse. It seems that despite all of the wonderful things that can happen, somehow, things haven't changed that much. So you can see self-driving cars in 2 years, 2015, Elon Musk's bold vision. I actually don't know who the fellow is in the middle, but he predicted radiologists will be obsolete in 5 years in 2016, and here we are, not so long since 2024 with radiologists in a traffic jam. So things change, things stay the same. I guess one of the things about AI, which is perhaps more concerning than you and I all being out of jobs tomorrow because AI learns how to do PowerPoint slides, is the economic implications of an AI bubble. So US equities are trading at very high prices. You can see the price earnings ratio on the top left here. We're up above 25 times, which is more than we've seen since I've become aware of what equities are. So prices seem high. That is generally believed to indicate that prices are too high and probably going to come down, which is often a little bit of an unpleasant experience, as we've learned in the past. I'm looking at 1999, 2000. Unless, of course, this time is different, which it always is. Goldman Sachs thinks so. And you can see some of the rationale for this on the right-hand side. And it took me a little bit of time to decipher what the right-hand side chart was trying to say. But basically, it says that in past bubbles, there was essentially a small number of companies with extremely high valuations relative to earnings. So if you look at tech bubble leaders, 2000, 19% of I guess it's the S&P or the NASDAQ was kind of reflected by these companies, and they were trading at ridiculous earnings multiples. And that was what triggered the popping of the bubble. In the case of the Magnificent Seven, it's a much larger proportion of the market which is not trading at such ridiculous multiples that results in the aggregate view on the top left. So perhaps what's going here is not as crazy and fluffy as we might think. So don't worry. Keep investing as Goldman Sachs' message. That's not my message. I'll let you make your own conclusions, but there you go. Final thing to talk about, expect the unexpected. What could happen, and what should we do about it? So in my experience, without thinking too hard, what we're capable of predicting or anticipating and incorporating in our day-to-day behavior is not that far apart from the expected case. So this is a normal curve with some standard deviations to the left and the right. And generally what's regarded as bad news is probably on the left, which are grey rhinos and black swans. So black swans are things that we didn't know about that kind of bit us, and then we did know about them, and that wasn't a good experience. Grey rhinos are things that we do know about, but we just don't think about, and they lead to bad things happening. But there's also the things on the right-hand side, which are good things happening, which we didn't expect, which are silver linings and windfalls. And in all cases, obviously we can't predict the unpredictable, but we can perhaps posture a little bit more thoughtfully so that we can avoid the worst and take advantage of the best. Easier said than done, but I think we can give more thought to that. I just want to highlight some of the things which have happened. I mean, some of these are a little bit further in the past, but some things happened pretty recently, and we didn't expect these to happen, and they happened. And therefore, we should have at least part of one eye focused on the world of macro issues and thinking about what's going on here and how can we not get stung by bad news. But there are all sorts of things that have happened over recent years. So I mentioned South Korea, political upheaval. I mean, I don't remember, you probably remember the Suez Canal blockage, which screwed up supply chains right in the middle of COVID. Obviously, what happened in Russia and Ukraine, 9/11, coronavirus, earthquakes in Japan, floodings in Spain, Lehman bankruptcy. I mean, the Assad falling in Syria, the US Capitol being stormed by a pro-Trump mob. Bad things can happen, and they can happen quite close to home in ways that can be very disruptive. And it feels to me like we should not be agnostic to what happens here and just say, who knows what will happen? I'm not even going to think about it. It feels like we should be doing a little bit more just to ready ourselves and think about how we would react if the bad things happen. So there are a couple of choices here. We can just let the dice fall and then just be surprised and then panic and try to fix things. But there may also be ways that we can proactively anticipate and manage risks. And maybe this is more of a point of reflection rather than something that I can answer here. Are there ways we can anticipate and manage risks? Are there ways that we can shape our environment to mitigate or minimize the chances of bad things happening? Can we take a posture that helps us react to kind of unfortunate or even fortunate surprises happening? And we can build that into contingency planning. We can use that to identify opportunities, can help with resilience, enhance competitive advantage as well. That's pretty much it from me. Here are 5 books that I like, which I find interesting. They're a bit obscure looking maybe, but let me just explain quickly. Berlin Diary, I just think is very interesting. It's an account of American living in Berlin in the 1930s. And this just shows that even in perhaps one of the most boring countries in the world, the unfortunately amazing things can happen that can be hugely disruptive in the most dramatic ways for people. And these things can happen again. I mean, look what happened in Korea. Obviously, we're not quite equivalent, but still big political surprises can change the world. And being on the wrong side of those things, obviously, is very tough. A book on leadership by Henry Kissinger, just a very thoughtful study of how leaders have acted and shaped their worlds and kind of guided their countries at times of adversity. The middle one here is John K. Mervyn King, Radical Uncertainty. This is a study of basically what I was alluding to earlier about all of the things that can happen and how we can best understand our world and posture to be, best positioned to kind of maybe not prosper, but at least survive. The Crisis of Democratic Capitalism is an interesting book by Martin Wolf of the FT, a study of the things that we assume are natural in terms of the capitalist system and its connection to democracy, and how quickly that can get wiped away. And many of the assumptions we make about the comfortable life we live can change. Ministry of the Future is a nice book about a potential future with a pretty nasty environmental outlook and how the world might adapt. Final slide, and then we can do questions. Please link in with me. I'd be happy to be connected to you. That's it, Ryan.
Thank you, Patrick,
Yeah.
for the very thorough download of all the trends on your radar right now. I'm sure it's invaluable for people across different sectors. Almost out of time, so jumping into questions. One from a live viewer, James Feliciano from AbbVie Japan, is asking, one impending ticking time bomb in Japan is the long tail of pharma companies that lack in innovation and live off of long listed product revenue. Do you see consolidation or attrition for these companies?
It's a great question. The case for consolidation is a bit tough, because some of them, I mean, their revenue lines are sunsetting. They have nothing new coming. They don't have very attractive P&Ls. You'd have to combine a whole lot of them and do a whole load of restructuring to maybe build anything kind of plausible and tangible and valuable in itself. So probably things at the far right of that long tail probably aren't sustainable, obviously not in their current form, but maybe not even bulked up. I think if you move more into the kind of more well-known tier 2, tier 3 pharma companies here in Japan, some of those are being studied by private equity. I think there is a case for restructuring and looking at particularly R&D costs and sales costs there, and then thinking a bit about how to maybe combining two and bulking up the top line, but also thinking about in licensing as a way to expand revenue as well. But that even there, making those more sustainable requires quite a lot of engineering of the cost base. So there will be a lot of hard work needed on many companies, and to be honest, many companies, I don't know, they've all been around for many years, and in some ways haven't necessarily changed that much, but they seem to be facing a bit of an existential crisis, many of them. So I mean, I don't advocate for bad news for people working at these companies, but in some ways the outlook is quite tough for many of them.
And of course, Japan wanted to have its own COVID vaccine. They didn't. They didn't win the race versus Pfizer and Moderna and some others. But we are seeing now manufacturing facilities popping up in Japan for innovative modalities, radiopharmaceuticals, for example. But there's also talk of contingency plans going into place for, if there is another pandemic, for Japan to manufacture nationally, domestically. So what are you seeing in terms of resurgence of Japanese pharma companies? Which are the ones that are investing in an innovation here in Japan?
So I guess I'll break that up into two. So there's the manufacturing capacity and sophistication point, and then there's the more innovation and kind of invention point of new differentiated drugs. So just on the manufacturing point, I guess there are a few factors which are supporting the manufacturing sector here. One, I guess, is a bit of hurt pride and the feeling of not being able to, hurt pride, but also not being able to serve your population at a time of national crisis, and somewhat leaning on the EU and particularly the US to fill the gap there, and the impulse to reinvigorate the local manufacturing scene. There's also I guess, the forces of geopolitics, onshoring, friendshoring, that have been, which should be supportive of Japan, which has a high quality manufacturing base and does have the capabilities of playing roles along the pharma value chain. And then the Biosecure Act and some of the provisions there against some of the Chinese companies, which are very embedded in US biotech supply chains, should, although that didn't actually come to pass, nevertheless, that kind of concern and risk that, if you're a biotech in the US, your supply chain can be like ruthlessly disrupted by politicians in Washington, should also be supportive of interest in seeking supply from Japan. So I would hope that there is a growth and an impulse to support Japanese manufacturing. On the innovation side, I guess there's a lot being spent by the top tier of Japanese pharma, and we've seen, obviously Daiichi Sankyo have success with ADCs, and Eisai, have scientific success with Alzheimer's disease drugs, although that hasn't necessarily translated to commercial success. And obviously there's lots of examples of Japanese pharmaceuticals and Japanese academics kind of providing input into successful Japanese pharmaceuticals that have gone on to be successful. So there are companies which are innovating in the space, and you've got companies like Astellas that are spending a lot on very innovative things, although as yet to not so much avail. So there is a lot of activity and innovation being sponsored by Japanese pharma companies, and there is some obviously benefit to that. But I think in many ways they're all suffering. The big companies still suffer from the same or similar disease that affects EU pharma and US pharma. Ultimately, the R&D spend isn't that productive when done themselves, and they have to look to innovation from elsewhere. And that's typically the biotech sector, and Japan's biotech sector is not quite there yet. And Japanese pharma will need to look to the US, to Europe, to China, potentially Korea, potentially Taiwan, to find that innovation to supplement what it can do itself.
Thanks, Patrick. Well, we're almost out of time, but the last question I want to ask you on behalf of our viewers is, of all these trends, if there was one trend that's underestimated that we should all keep in mind, look out for, stay alert of, what would that be?
I think massive political disruption in the United States. I don't know if it's under talked about, but I don't think it's appreciated and baked into people's planning. And we almost saw that 4 years ago could happen again. And I think that's something we should be taking pretty seriously.
Okay. Well, thank you very much, Patrick. Really appreciate you taking the time to prepare and lay out all these trends for us today. I'm going to take back control of my screen to share with our viewers a little bit about our next event, which is next week, next Thursday, and that is with Mei Haruya, head of the hematology franchise of Novartis. But before that, he was head of market access and pricing, and his background is market access and pricing. So he is proof that the market is shifting toward being more open to commercial leaders, business unit heads with a non-traditional sales and marketing background. So we invite you to register and join us for that event, so you can ask any questions you like to Mei as well about how he's overcome challenges in his career and developed the agility that has gotten him into this commercial leadership role. So once again, Patrick, thank you very much. Is there anything else that you'd like to add before we clock off for the evening?
No. For those that joined, thank you. I'm glad that you listened to my my diatribe on macro issues. Thanks for your time.
All right, thank you so much, Patrick, and thank you very much, everyone. This concludes our webinar for this evening. See you next week. Over and out.
Thank you.